Welcome back to Investing Talk Podcast. Today, we're going to be looking at a company called Vertiv Holdings, ticker symbol VRT.
Oh, yeah, I've heard of them.
They've been in the news lately, and their stock has really taken off, like almost 500% in the past year.
Wow. That's pretty impressive.
It is, but there's also some things that make you wonder, like, are they really worth all the hype? Or is this a bubble that's about to burst?
I see what you mean.
Yeah, so we're going to try to figure that out today. Look at the good and the bad.
Okay, sounds good.
So first off, why is Vertiv doing so well?
Well, it's all tied to this huge growth in data centers. And that's being driven by the need for more and more AI.
Right, AI is everywhere these days.
Exactly, and all the AI needs somewhere to live.
So data centers are like the homes for AI.
Yeah, you could say that. And Vertiv makes the stuff that keeps those data centers running.
Okay, so they're in the right place at the right time.
You could say that, but their most recent earnings report wasn't amazing.
That's right. They did okay in Q4 2023. Earnings per share were 56 cents. Not bad, but analysts were expecting more.
Yeah, that happens sometimes.
And their guidance for Q1 2024 is even lower. They're saying earnings per share will be between 32 and 36 cents.
So maybe things are slowing down a bit.
Maybe, and that's got investors a little worried. Now let's talk about valuation for a minute. Vertiv's price-to-earnings ratio, or PE, is 45.
Okay, and what does that tell us?
Well, the average PE for their industry is about 20.
So Vertiv is way above average.
Yeah, more than double. Which means investors are paying a lot for each dollar of Vertiv's earnings.
So they must think Vertiv is going to keep growing like crazy.
Right, they're betting on the future, but what if that future doesn't live up to the hype?
That's the risk.
Exactly. Now imagine this. If Vertiv's PE went down to that industry, average of 20, their market cap would drop from $31 billion to under $15 billion.
Wow, that's a big difference.
It is. So are investors being too optimistic, or is Vertiv really worth that much?
It's a tough call.
Yeah, and here's another thing that makes you wonder. A big institutional investor recently dumped almost all of their Vertiv stock. International Assets Investment Management. They sold off 97.5% of their shares.
Wow, why would they do that?
That's the million-dollar question. These big investors usually have access to a lot of information and analysis.
So maybe they know something we don't.
Possibly. But then again, you have some analysts who are actually raising their price targets for Vertiv. Like Bank of America, they went from $130 to $140.
And what about the other one you mentioned?
Oh, yeah. TD Cowen, they bumped theirs up from 115 to 141.
So it's a mixed bag. Some people are bullish, some are bearish.
Exactly. And that just makes things even more confusing for the average investor.
Yeah. So how do you make sense of it all?
Well, that's what we're trying to do here. Look at all the different pieces of the puzzle. We've talked about Vertiv's growth, their earnings, their valuation, and what some of the big players are doing.
Okay, so what's next?
Well, we need to zoom out a little bit and look at the bigger picture. What's happening in the overall market that could affect Vertiv?
Oh, yeah. That's important too.
Absolutely. So let's talk about that now.
Okay, so the bigger picture, what are we talking about?
Well, one big thing is interest rates.
Yes, the Fed.
Exactly. They've been raising rates to try to control inflation.
Right, and that makes it more expensive for companies to borrow money.
Which can hurt their growth, especially for companies like Vertiv that are still expanding.
I see. So higher interest rates could be a headwind for Vertiv?
Definitely something to watch. And then there's investor sentiment.
Oh, yeah, that can change on a dime.
It sure can.
For who?
Right now, the market's pretty optimistic, but that could change quickly if inflation stays high or there's some other kind of economic shock.
Yeah, investors can get spooked easily.
They sure can. And when that happens, even good companies can see their stock prices drop.
So Vertiv isn't immune to these broader market forces?
Not at all. They're part of the ecosystem. So even if you believe in their long-term potential, you got to be aware of these external factors.
Makes sense.
Okay, so we've talked about the big picture now. Let's dig into some of Vertiv's financials. See what the numbers tell us.
All right, let's do it.
So their latest earnings report showed earnings per share of 76 cents.
And how did that compare to expectations?
It actually beat expectations. Analysts were expecting less.
Okay, so that's good news.
Yeah, and their revenue was up 19% year over year.
So they're growing.
They are. But remember we talked about their guidance for Q1 2024. That's where things get a little shaky,
Right, they're projecting earnings per share between 32 and 36 cents.
which is lower than some analysts were hoping for.
So that's why the stock price has dipped a bit lately.
Probably investors are reacting to that short-term outlook. But hey, what about those analyst price target increases we talked about?
Oh yeah, Bank of America and TD Cowen.
Right. They both raised their targets quite a bit.
So some people are still bullish on Vertiv.
They are. And it's important to remember that analyst ratings aren't always right. But they can give us some clues about what the experts are thinking.
Yeah, it's all part of the puzzle.
Okay, so we've looked at earnings revenue guidance.
Mhm.
What else should we consider?
Huh. Well, we haven't talked about technical analysis yet.
Oh, yeah, good point. Could you
Yeah.
give us a quick rundown on some of the key technical indicators for Vertiv?
Sure. So first off, Vertiv is currently trading above both its 50-day and 200-day moving averages.
What does that mean?
It's generally considered a bullish signal, meaning the stock has upward momentum.
Okay, six.
And then there's the relative strength index, or RSI.
RSI. Okay, I've heard of that.
It's a measure of how quickly and how much a stock's price has changed.
To see if it's overbought or oversold.
Exactly. And Vertiv's RSI is currently at 54.93.
Which means...
It's pretty neutral, not overbought, not oversold, so there's room for it to move in either direction.
Interesting. So the technical indicators aren't giving us a clear signal either way?
Not really. They're just telling us the stock has the potential to go up or down.
Okay, so we're back to the fundamentals and the big picture.
Looks like it.
All right, well, I think we've covered a lot of ground here.
We've looked at Vertiv from all angles.
So what's the verdict? Is this company a buy, a hold, or a pass?
Well, as always, it depends on your individual circumstances and risk tolerance.
Right. There's no easy answer.
But hopefully this discussion has given you some food for thought.
Yeah, and maybe helped you decide whether Vertiv is right for your portfolio.
Exactly. At the end of the day, it's your decision.
Absolutely. But before you make that decision, there's one more thing we need to talk about. Competition.
Ah, yes, the other players in the game.
Vertiv isn't the only company in the data center infrastructure market.
No, they've got some big competitors.
They do like Eaton Schneider Electric ABB.
Those are some heavy hitters.
They are. So how does Vertiv stand out in such a crowded field?
Well, they focus on specialized solutions for data centers and other mission-critical environments.
So they're like the experts in that niche.
Yeah, you could say that while their competitors are more diversified.
I see. So Vertiv is going deep while others are going broad.
That's a good way to put it. And they've built a strong reputation for their expertise in things like power distribution, thermal management, IT infrastructure.
Okay, so they know their stuff.
They do, and they're also investing heavily in research and development.
To stay ahead of the curve.
Exactly. They're focusing on areas like energy efficiency and edge computing, which are becoming more and more important.
So they're not just resting on their laurels.
No, they're trying to innovate and stay ahead of the competition.
Good for them, but it's not going to be easy, right?
No, those big competitors have a lot of resources and a global reach.
Yeah, and the technology is changing so fast.
It's a constant challenge for Vertiv to keep up.
So they need to be nimble and adaptable.
Absolutely, if they want to stay on top.
Well, it sounds like they're doing what they can.
They are, but only time will tell if it's enough.
Okay, so we've talked about the good, the bad, and the competitive landscape. Now it's time for you, our listeners, to weigh in. What are your thoughts on Vertiv after hearing all this? Do you think they're a buy, a hold, or a pass? Head over to the comments section and let us know. And while you're there, don't forget to subscribe to Investing Talk Podcast for more deep dives into fascinating companies. And if you found this episode helpful, please share it with your friends and colleagues. Thanks for listening, and we'll see you next time. All right, so we're back and ready to wrap up our look at Vertiv Holdings. We've gone over their stock performance, their earnings, their valuation, the competition, all that stuff. Now, the big question is Vertiv a buy, a hold, or a pass?
Well, that's the million-dollar question, isn't it?
It is. And unfortunately, there's no easy answer.
Nope, it all comes down to your own individual situation.
Your risk tolerance, your investment goals, all that.
Right, and how you feel about Vertiv's future.
Exactly. So what are some of the key things investors should be thinking about?
Well, first off, you got to acknowledge that growth story. Data centers and AI are booming, and Vertiv is right in the thick of it.
They're providing the essential infrastructure for this whole digital revolution.
Exactly. But then there's that valuation. 45 times earnings, that's pretty high.
Yeah, it makes you wonder if they're overpriced.
And that recent earnings miss doesn't help.
True. It might be a sign that their growth is slowing down.
And we can't forget about those broader market forces.
Right. Interest rates, inflation, all that stuff can have a big impact on any company.
especially a growth company like Vertiv.
So it's a mixed bag, some good things, some bad things.
And investors need to weigh it all carefully.
Look at the risks and the potential rewards.
Exactly. Do your research, understand the company and the industry.
And most importantly, make your own decision.
Don't just follow the crowd or listen to what some analyst says.
Right. Think for yourself.
And remember, investing is a marathon, not a sprint.
It's about the long game.
Don't get too caught up in the day-to-day fluctuations.
Focus on the fundamentals and the long-term potential.
That's the key.
So what do you think about Vertiv? After hearing all this, are you bullish, bearish, or somewhere in between? Let us know in the comments. We'd love to hear your thoughts. And if you enjoyed this episode of Investing Talk Podcast, please subscribe to our channel for more insights and analysis. And don't forget to share this episode with anyone who might find it useful. That's all for today, folks. Thanks for listening, and happy investing.